Are these recent M&A deals signaling a resurgence in activity? Richard Climan, a partner in Dewey and LeBoeuf's mergers and acquisitions group, isn't convinced it is. He joins us now with his take on the present M&A climate. Mr. Climan, welcome to Bloomberg News.
Thank you.
You're not sold. Why not?
Well, I'm not completely sold. I think, as a general matter, it's probably premature to actually call this the beginning of the next M&A wave. It may even be premature to call this the evidence of a turning point
What
here.
type of internals or metrics do you need that would change your thinking?
I think it isn't so much hard statistics. I think it's boardroom confidence, and I think the word in the boardrooms is still caution at the moment.
That's not necessarily a measurable statistic, is it?
No, it's not. But and certainly, if you do look at statistics, signs are favorable. Historically, and at least in past cycles, there's been a lag of several quarters between an uptick in the stock market and a recovery in the M&A marketplace, and that means we should be looking at a recovery, perhaps sometimes later this year. But I do think it's still a little bit premature at the moment to say that. I do think that M&A discussions are being held at the board level. I think that,
which in and of itself is a positive sign, because at least the discussions are being held.
Exactly, and I do think that that boards are taking M&A plans that they had shelved and reviving them right now. But I don't think that's translating into a lot of announced deals, notwithstanding the recent slew of billion-dollar-plus deals we've seen over the last month or so.
Okay, now you believe the fundamentals are in place. What are you seeing that gives you pause?
Well, again, I think a lack of confidence. I think that there are other general metrics that suggest that, while we appear to be getting out of the recession, we're still in a down market. This is still a buyer's market for M&A. There are some folks that think that because the premiums we've been seeing on this in this M&A wave have been relatively high, that that's a signal of substantial recovery. But my own view is that you do tend to see higher premiums in a down market, simply because it takes higher premiums. It takes a higher price to entice sellers to sell at what they might otherwise consider to be a bottom in the marketplace.
When we start seeing that full-fledged turnaround, which areas are going to be in the lead?
I think life sciences, including pharmaceuticals, biotech, etc. Part of that fueled by patent expirations and the like, and also as the technology sector matures, generally, I think you're going to see a lot more in the technology arena.
Let's talk about the Xerox deal that was announced today, and we had the CEO Ursula Burns on our air earlier. What about that intrigued you?
Well, I think one of the things that I noted about it is that a very high proportion of the deal currency, the deal consideration, was stock of Xerox, not cash. And this ties into something that one of the earlier commentators mentioned. But I do think that when you see tight credit markets, as we're seeing now, you tend to be in a situation where buyers are forced to use shares of their stock rather than cash. And interestingly enough, it is a little bit easier to entice sellers in this market to accept shares of the buyer's stock, simply because they want to preserve some upside and don't want to be seen, at least with the benefit of hindsight, as having sold in a down market.
And Mr. Climan, in about 10 seconds, are you starting to see that credit market loosen? Is it thawing?
No question about it. I think the credit market, is at least for very, very strong borrowers, is getting more accommodating.
Richard Climan, partner at Dewey and LeBoeuf's mergers and acquisitions group, talking M&A. Sir, thank you so much. Appreciate it.
Thank you.